We are live. Happy Juneteenth. Hope everybody had an awesome Father's Day. I did. My family took really good care of me. Had a great time, and it was a good weekend. I never got to the week ahead commentary. I got too wrapped up with other things, so I'm going to do it tonight live, and I'm going to put for our best stock charts for the new trading week. I'm going to put the price targets, uh, entry points, and the stop loss points in the members area. So check it out after the show. I'll update it after the show. So let's kick it off with the price action today on the futures. Obviously, very, very light volume, but the futures markets never sleep. They were open today, and equities closed down with volatility spiking up. Now, light volume. I put almost zero emphasis on today's price action, but it becomes more important if we get follow through, right? So that's what we'll be looking for tonight. Do we get follow through on today's price action? The futures markets are back open again. And what we're going to do is we're going to begin with equities, then we're going to take it over to currencies. I'm going to talk to you about what the machines are doing, what they're buying, and what they are shorting. And what they're shorting could heavily influence the price of gold. So we're going to talk about that as well, and silver. And when I talk about gold and silver, I usually mean the miners as well, but I'm not ready on the miners yet. I'm a little bit concerned. So let's get to it. So this is a 15-minute chart. These will all be 15-minute charts. And first, let's say hello to everybody while the futures settle down here a little bit. Corey, hello, sir. Sean, hello. Mr. Pete, hello. And Franklin. I'm going to do it live tonight, Franklin. I apologize. I didn't want to do the weekend commentary and the live stream in the same day. I figured that would be too much. So I combined them both so I didn't bore you to death with too much content. William, hello. Denny, hello. Buster Stacks, it's been a while. Good to see you. All right, let's get to it. We have this doesn't look right. Let's go to a 5-minute chart. We look up, but this is saying that we're negative. This is the second week in a row that these quotes appear off. We're up, not down. I think this is the closing price of regular hours trade. So they're still counting this as the 19th. That's why this is showing is down. So net, we're down on the day. Yes, I'm looking at the close here. So just take into consideration that we were open today on the futures action. And we are coming off the highs a little bit, but not much. Let's move on to the Russell 2000. Down on the session, struggling here a little bit, but certainly not out of the game. Bit of a wedge formation. Dow futures. Now here's the 15-minute chart to get a feel for how the day was. And you could see that today was a down day, but they're trying to break the Dow futures out now. In fact, they have broken them out. We just did a retest and a reversal bar on a 15-minute chart. NASDAQ. Where are my NASDAQs? NASDAQ, where we at? Go with the NQs. On the day, NASDAQ futures down, but at the open this evening, they are trying to make a comeback. No breakout here on this 15-minute chart. They tried to rally, a bit of a rejection, and we are just off of session lows. Now, moving on to the currency market. The dollar had a very bad week last week, and we're going to be focusing a lot on that. And I did get the updated, I'll call it the machine report until I come up with a better name. And the machines are now selling yen. And the second largest component of the Dixie basket is the yen versus the euro, which is under accumulation. Now, the dollar is down on the session on the day, and it's probably going to get weaker. Now, moving on to euro. Keep in mind, the Europeans are still raising interest rates. This may have been their last interest rate increase, but the euro spiked last week, and that allowed the dollar to drop. Thank you, TZ Burton. Same to you, man. Let's move it on to the euro. Euro not doing much. It's such a quiet session. Not much is happening at all. I mean, Sunday nights are more busy than what it is right now. Let's go to commodities. Oil. Oil had a bullish reversal week. We're going to go over the weekly charts in a moment to see how we closed out the week. And we'll talk a little bit about strategy and light sweet crude futures. They are down on the session. The however is that they are making a nice comeback. They had a very good week last week, but at current down a half percentage point. Taking a look at natural gas, the machines are building positions in natural gas. You have two tranches or two gauges of machine buying. You have the quicker traders, they're loaded up with nat gas, but the longer term machines, they are buying up natural gas and they're only at about 15% of their intended allotment. So expect more buying of nat gas futures. And I'm still back testing a lot of the research that I'm getting. So I'm 100% confident with what information is being fed. So we'll be talking more about the machines with members. I'm probably going to add on another segment of the members area showing how the machines are positioned. And that'll be a value add for existing members. But I want to have confidence first in the reporting. But I'll tell you, at current, it's been pretty smack dab on. Now, one metal in particular that is under accumulation by the machines is palladium. Now, palladium has been in a big bear market, and excuse me, last week we saw a major breakout, and I was talking about the machines were beginning to build positions in palladium before this reversal bar occurred. So it looks as though we're getting ready for a continuation breakout. So you could trade PALL as a trade if you're so inclined to get long. And that's probably what we're going to be trading to get long of palladium and or natural gas. Palin, happy Father's Day to you, pal. Good photos. Good photos. Let's move on to gold. I got silver in front of me. Let's go to silver first. Silver's consolidating. So I titled this as a time to buy silver and gold. I got to tell you that, you know, I'm net short the market now. So the reason why I said earlier that I'm not so inclined to go buying the mining stocks as of yet is because if we do get a correction in the market, the mining stocks are probably going to go down along with S&P 500 stocks, Q stocks, small cap stocks, because you have a lot of amateur money out there. They're loaded up on margin debt, not as bad as it was in 2021, but they're loaded up on margin debt. And when the machines start selling off their positions to meet margin call requirements, everything goes down. Gold and silver will probably go down, but not as much as the mining stocks. So I'm being a little bit more cautious with those names at current because I think that Friday was probably the beginning of a not a crash. I'm not going to be hyperbolic. I think that it's the beginning of a correction in the market, a healthy correction. I think that where you need to worry is after we get the correction and we rally back and we attempt to take out prior highs, that's when you worry. Because do you get the double top? And if you get the double top, do you break down to new lower lows? And if you're breaking down to new lower lows, what's the catalyst? What is the market worried about? And we're going to talk about my concerns that could pop this bubble in a couple of moments. It's not a bubble. This is not a bubble. I apologize. It's a debt bubble, not a stock market bubble. It's expensive, but it's not a bubble. So, moving on. Silver holding support here for the past several weeks. The longer the consolidation, the greater the validation of any breakout. 15-minute view. They're trying to break it out now. It's down at current on the session, on the day. A little bit of a higher low action going on here with a double bottom setup on RSI, but this is only a 15-minute chart. We're not day trading here. Let's take a look at gold futures. Gold on a 15-minute time frame is bouncing back. It is down on the day, but it is broken out on a 15-minute time frame, higher low on a 15-minute chart as well. The question is, does it hold? And I can tell you, the machines are beginning to buy gold now. That's the reporting I'm getting. In fact, they're 35% long on their fast trades. They're still technically short longer term, but not as short as they were, 15% short and only 35% long, fast or short term, longer term, 15% short. So there's more room to the upside for gold if they decide to cover a lot more of these shorts and become net buyers of gold. So still a longer term short position on gold, but they're beginning to do some buying here. And silver, they're loading up on as well, both short and long term. What else we want to take a look at? Bitcoin, I looked earlier, had a really good day today, up 1.44%. Let's go to a longer term view here, weekly view, to get a feel for how we're setting up. I think we're moving up higher. In fact, we've broken out. We broke out last week. We had a bullish reversal bar and a continuation move up higher this week. Bitcoin looking good. Now, back to let's stay on the weekly chart. Let's go over some additional commodity prices. Cattle, which had spiked up the week prior to last, flashed a reversal bar. This candlestick is as of the 12th, so no trade for this week yet here on cattle futures. This is last week's price action, and we held support. We faded off the highs of the week. So cattle holding support, seeing a little bit of pressure. I don't think I get data on cattle. I don't even get data on VIX, which kind of has me upset. I was looking for that earlier. I do not get data on cattle. I get it on a lot of others, base metals, wheat, soybeans, uranium, timber. Let's move on. Let's go to agriculture. Corn prices, a continuation move up higher. This is last week's price action. This is not as of this week yet. So not a lot of activity in corn futures today. Soybean futures, this is as of last week, a big move up higher. And the machines here are 100% long short term and 55% long term, 55% long longer term, and still buying under accumulation. So we may get a breakout here on soybeans. For me, it's a little bit too late in the game to go chasing these. And let's wrap it up with wheat. Wheat, nice move up higher. This is as of last week. So we have a breakout on wheat. And the machines, what are they doing with wheat? They are 100% long, short term, only 15% short. So it looks like they're covering shorts on a longer term basis and beginning to accumulate a long position in wheat. So we're early stage of a potential rally here in agriculture prices, at least on wheat. I'm out of order here. Did the SEC settle their lawsuit with Binance? I don't think so. I think they froze their assets. I could be wrong. Maybe I missed an article. Franklin, Binance's initial official statement highlighted the fact that it's been negotiating a settlement with the SEC, but it's possible that criminal charges may still be awaiting for Binance and Zhao. Okay. Thanks for that, Franklin. Uh, yeah, thank you for that. It's important when I always say that when we're buying options, we have to have an edge. We have to have that edge over other traders because you have time decay that works against you. So with volatility pulling back as much as it has and apathy being what it has been, I want to buy options wisely. Uh, Now we've been shorting the Qs. We got aggressively short on Thursday, Tesla, Nvidia, the Qs, and the reason why is that technically they're overbought, and the machine buying they have been 100% loaded up on S&P futures, triple Q futures, Nasdaq futures for weeks now. So what's driving the market right now is yes, you have the machines that are holding, but once they feel that momentum beginning to wane, things are going to turn pretty quickly, and then they become net sellers. So we want to short as they're 100% long, and they've stopped buying, and they stopped buying a couple of weeks ago. So uh, now we're looking for that weakness, which we began to see on Friday, I believe. I think Tesla was a standout. I think that because Friday was an options expiration day, I think that strike price in and around where Tesla closed, they had a pin there all day long. So I think that they had some options manipulation going on there. Otherwise, Tesla probably would have fallen with the rest of the market. I mean, Nvidia got killed late in the day, but still closed up, and we are short of Nvidia. Okay, let's move on. Let's just first check back in with the future. Oh, look at this. E-minis are flirting. Let's set up an alert here with a lower low. They just bid it up now. Let's just set up an alert out of curiosity. We'll put one up on the NASDAQ too. Now you can see here that volatility is moving up higher. Let's clean this up. So despite the fact that we closed down on Friday, I mean, volatility was just absolutely annihilated last week. Come on, give me a break. So the question is, do we begin to break out here? And I think that they probably are going to move volatility up higher. And I'll tell you why is that This is a 4-hour chart, so it's not insignificant. It's an intraday chart, yes, but it's one step away from a daily chart. So it's a really good early indicator of how the daily charts may move. That's why I use it so much. And you could see that RSI, now take note, here's the macro trend down, and it's been down for quite a while. But the thing to take note of here is that on RSI, VIX bottomed out back on, what day is this? We just broke support on spiders, or I should say the ES futures, S&P futures. This is back here on the 6th of June. Think about this. We're going into what, the 20th tomorrow? The 20th is tomorrow. So the VIX, which has been in a downtrend for a while now, RSI bottomed out a couple of weeks ago and is now doing this, putting in higher lows. Not only that, it's also putting in higher highs. We're going to talk more about the VIX in a moment on a macro time frame, on a monthly, weekly time frame. But just take note of this. This is not insignificant that we bottomed out on RSI a while ago, and stochastics are beginning to hook up as well. These are momentum indicators. So let's go back quickly to check out the S&Ps to see what they're doing. Let's see if there's anything behind this. I don't think there's gonna be. There's no real. You don't see a breakdown of stop loss orders here, so there doesn't appear to be a lot behind this move lower. 15-minute chart. We are flirting with a breakdown though, but it's only a 15-minute chart. This could reverse easy. This is very thin volume, so we're not being hyperbolic here. I think that far more critical of an observation is not the futures on the S&P 500, but it's the VIX, that longer-term macro view. We have a bullish divergence on RSI 4-hour chart on VIX. That, to me, is far more significant than a 15-minute chart of the ES futures. Okay, so going into the new trading week, is there more room to the upside? Yes, the path of least resistance remains to the upside. Now, we did hit a resistance level on the Qs last week, right at this. Let's get rid of all of these. You know, fine. I'm going to keep these because I want them for support levels later on. So 369 spot 51. We broke through it, and then we had a clear and defined rejection at that resistance level. This is the Pimp Mac Daddy number. We just rounded up 370 on the triple Qs. And on a daily view, they broke it out on Thursday. We had a breakout point failure, a failure to hold support on Friday, and we were down on volume, folks. Not insignificant, folks. We're using TrendSpider, 35% discount code below. I don't feel like doing a pitch tonight, but take advantage of them. Automated technical analysis. The trend is still clear and defined, though, to the upside, but man, we are overbought. So let's move on here. A reminder, folks. We are trading in a time of a two-tier justice system. If you're not in the club, which is a very small club, you are out of the club. Now, over the weekend, the federal government, they did what they do best. And that's when they drip out bad information that the public does not want to hear about. So everybody was barbecuing. And all the while, what were they doing? Feds quietly dropped 5 charges against Samuel Bankman-Fried today. The rest will be a plea bargained away, said a source close to the matter. I don't know this to be fact, but you know what? What we're dealing with in this society today, we have one president, a former president, under multiple indictments, where you have Hillary Clinton that skated away scot-free. And this guy here, who donated heavily to the Democratic Party, he's probably going to skate away free as well. So this is the environment. These decision makers are entrusted with making decisions that can have a fatal error on this economic system. So they may appear to be confident and competent and capable while they go get interviewed by family friendly or lamestream media outlets. Beware, folks. These are morons. These are incompetent ideologues, and they're going to let this guy walk free. Were it you, me, we would be in jail so quickly, we would never to be seen again. Economic data coming out this week. Not much going on here. We have housing starts tomorrow. Powell's going to be up on Capitol Hill. I believe the House the House on Wednesday, then on the Senate on Thursday. It's all going to be scripted. I don't know how much he's going to have to offer. He's not going to say much that's going to rock the markets, I don't think, but you never know. Just keep an eye on it. The CNBC will be tuned in, no doubt about it. And on Thursday, we're going to get leading U.S. economic indicators. PMI numbers are coming out, both services and manufacturing. On June, we've seen a lot of weakness here of late, and probably bad news will be good news in this market environment, because bad news will have the Federal Reserve not being able to raise rates in July. And speaking of raising rates, let's see what the market is. The last time I looked at this is the CME FedWatch tool, and it gives you a measure, an indicator of how the markets are betting what the Federal Reserve is going to do at their next meeting. So this was at 68% on Friday. It has now risen to 74.4%. I'm surprised at this, to be honest with you. 25.6% of market participants expect no action whatsoever. The rest are betting on a quarter basis point rate hike. I'm surprised at this. Now, in terms of valuation of the market, we're going into the new trading week with a PE of 30.78. Very, 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 very expensive relative to the mean at 17.03. Now, Liz Ann Saunders has been around for a while, well respected, and I follow her on Twitter. She's finally chiming in here. You don't hear much about the market being overly overvalued, but to her credit, she's speaking out. Since S&P 500 lows, October lows, forward looking. This is forward looking. This is rear view mirror looking. Forward looking PE of the 50 largest stocks in blue, I'll blow this up in a moment, is up by 30%. There hasn't been any gain in forward EPS in orange over the same time frame. We just had another alert fire off. We'll come back. NASDAQ futures just broke lows. E-minis continuation breakdown here, but it appears to be on very thin volume. Right? So I don't want to be hyperbolic here, and we're not down significantly. But clearly, we're seeing a little bit of a continuation of the negative price action during Monday's trade as we carry over into the Tuesday trading session. All right, so here's the chart. Forward-looking multiple in blue, where EPS has not changed much. EPS guidance has not changed much. So these are your top 50 stocks. We are short of them right now, and we're hoping for a continuation move lower in the near future. So you're starting to get some headlines come out about the fact that the markets are pretty much very expensive. They're technically extended. Extreme greed, a prescient signal of durable economy or a giant bull trap. I subscribe to the giant bull trap theory, and this is out of Goldman Sachs. We haven't been this overvalued in many, many years. This is sentiment. This is bullish sentiment. And you can see that we are here at a 1 spot 2 standard deviation extension beyond the mean. Very, very overvalued. This chart here is out of CNN, and I haven't back tested this, so I'm not going to put much confidence in what CNN has to say. Not until I back test it. So I'm going to not talk about that. Bulls Bears indicator, we will talk about it. We have been talking about this of late. Bullishness continues to rise. It is at the highs of the month. I do believe we closed out at 392 spot 21. The high of the month was, they don't give me a closing price here. Oh, that was the closing price. What was the high? They don't give you a high. Okay, that's wonderful. We can go to a daily chart and just do this. Yeah, we're at the highs of the month. All right, so I want to go back to this monthly chart here. This means nothing, means absolutely nothing until we begin to roll over. Overlaid here, roll over on stochastics. Overlaid here in black is the S&P 500. And you can see that every time we spike up like this, here in 2017, again, 2021, you are here. You begin to weaken up on the S&P 500 when we begin to roll over on Stokes. We're still rising here, and we haven't backed off yet. So once we get a little bit of negativity in this market, it'll reflect itself probably in the S&P 500. And that's when people begin to talk nervously. But the question is, what's going to cause people to get concerned? Is it the fact that we're overbought? Or is it going to be something that's more macro? So they could talk away being overbought. They could bring out the talking suits. They could talk about how forward-looking economic growth is spectacular. There's room for multiple expansion, blah, 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 blah. What they can't talk away are my concerns. I'm going to go to them in a moment. I've been talking about them. I'm going to reiterate it here yet again. Now, the yield curve, which we always talk about, the yield curve is, my God, we're closing in on taking out the lows of 2023. I keep saying this because I don't know how else to articulate this. When you get this type of a reading, where you have yields on the 2-year yield vastly outperforming or higher than the 10-year yield, that's the market saying, the bond market speaking volume is saying there's something very, very wrong. Beware, be careful. This never ends well. It never ends well. Nobody's going to be able to show me a chart of the yield curve steepening where it ended well for equities. It doesn't happen. Not since 1955. It hasn't happened. This always, but always leads into recession. Another concern is the VIX. I mean, the apathy here in this market environment where we just crossed over $32 trillion in debt. That's a known. That's in the books. Now, we have at a bare minimum another $4 trillion due to the Uniparty voting in that new debt ceiling, of which there is no debt ceiling until 2025. So they could go to $4 trillion and beyond, and they're going to do it. You have an election cycle coming up. They will spend their way to victory during this next election cycle. The Republicans handed them a blank check to do so. We have very little representation in Washington, D.C. You, the little guy, me, the little guy. We have very little in terms of representation. So the VIX, extremely oversold here. We had rallied back by around midweek last week to back above this support level. Right now, we are back down towards the lows of the week, or the month, I should say. Weekly view. We closed just off the lows of the week. Did we put in a new weekly lower low last week? The low of the prior week was 13.48. No, we did not. No new weekly lower low last week. Interesting. Daily view. Now, this is not a daily view. In fact, I'm going to delete that later on. Daily view. To me, knee-jerk reaction. This looks like a chart that wants to go lower. But knee-jerk reactions are usually the wrong reaction. So we need to take our crayon out, update our support and resistance levels. And what do you know? We broke out. So it appears as though we had the breakout here on June the 9th, pullback number one, retest one, bullish reversal bar, failure to capitalize in that reversal bar, pullback, but no new weekly lower low on the week. Do we get an inside bar tomorrow? My prediction, yes. I think that we gap up and into this candlestick tomorrow morning. What would be all the more bullish for VIX, therefore negative for equities, is going to be a gap up above this support level here. And if we do that and we hold it by the end of business on Tuesday, that is not good for the equity market at all. So this is another concern about being long of this market at current and why we were adding to shorts so aggressively on Thursday. And I'm not just talking selling premium. We were buying put spreads on the trip Qs on Tesla. Tesla, I could go over that chart in a moment. I will, in fact, but let's just get through my concerns about the market. Now, this chart here, this is from the St. Louis Federal Reserve. Now, this is net percentage of domestic banks that are tightening lending standards for commercial and industrial loans to large and middle market firms. So, why is this chart important? It's important because every time you spike up in every time you spike up in see a tightening in lending standards, generally it ends in recession. It happened back here, 2001, happened back here, 2008, ended latently back here in 2020. You are here. So another instance of where, and we can max this out, that's as far as it goes. You know, you could say that the rate of change on this spike up is slowed down a bit, but the trend is clear and defined. You saw a pause in the rate of change back here in rise of tightening back in 2008, but then you just got that big spike up, and that's when everything fell apart. So this is the other concern. We're looking for the needles in the haystack of what's going to cause this market to roll over. And I don't think it's going to be PE ratios per se. I think it's going to be the commercial real estate market, the tightening of standards, and these commercial real estate firms are saying, hey, here are the keys. I don't want this building anymore. I can't roll over this debt. My occupancy rate is rising. The value of the property, I'm underwater on it. So why do I want the headache? Here are the keys. Take it back. What happens? The banks with the most exposure to the commercial real estate market aren't the JP Morgan Chases of the world. They're your regional banks, the KRE, these guys here. And when you take a look at the regional banks, this is real time. This is as of the 14th of June. And this is the regional banks or the banks in general. This doesn't get broken out for regional banks. Going to the Federal Reserve saying, hey, can you loan us money overnight so we can open our doors tomorrow? Please, pretty please. This is as of June. Nobody's paying attention to this. This is back in March when everybody was saying, oh my God, run for cover. And they were selling of equities. You are here now. It's far worse than it was back then. Yet, equities continue to rise up higher. Then you take a look at the skew index. Something very, very odd happened. We spoke about this not too long ago, But as with the VIX, as with the yield curve, it's when they begin to rise is when you get nervous about the markets. Or in the case of the bulls, bears, when you get a change in trend. If this continues up higher, guess what? The rally continues up higher in the equity market. When this begins to roll over and the yield curve and the VIX begin to spike up, that's when things get real fast. That's when your algorithms begin to dump, or as I like to call them, machines, they begin to dump because they're net long. They're going to get out first. They're the smart money. But last week, the skew index, which is just another type of VIX in a way, it's been spiking up. But last week, a major pullback, and that's when things generally go the wrong direction for the S&P 500, which is represented up here. You saw this big spike up in 2021. Then we rolled over on skew. S&P 500 continued higher, and then as we continued to trend down, making lower highs and lower lows on skew, that's when the S&P 500 began to peter out and began to roll over. So are we beginning to see the end of this rally in these out of the money options on the skew index? It appears that's to be the case. And as for the regional banks last week, which we're going to keep a close eye on, they appear to be stalling out. Maybe they'll pop up higher this week. You never know. But you have a lot of resistance up here at around 45 on the KRE. And if we begin to break down to new lower lows, there's your catalyst. Now let's talk about, how much time do we have here? 6:42, not much time. Let's go to the closing price action. I'm going to blow through these as quickly as possible. Some of them we already went over. 10-year yield last week, up over a half percentage point. It made a comeback on Friday. It was weak on Thursday, made a comeback on Friday. As for bond prices, they were also up. Now, the machines were showing me that the TLT was under accumulation. They are 55% short-term long, and they're continuing to buy 15% long, longer term. So I would expect if the reporting is accurate here, I would expect to see a continuation move up higher on TLT. I got to say, technically, I'm not sure which one's going to win out here. I could make the argument that yields should be going up higher because we're taking on so much more debt. But you can make the counter argument the Federal Reserve is going to buy that debt, so why would yields go up higher? Okay, so the market's going to tell us who's going to win out here. As for the U.S. dollar, the dollar was annihilated last week, down over 1.5%. Daily view, let's see whether or not there's more downside room here. And there is. Friday was an up session, but we could certainly move lower here. So the dollar is in trouble. Who benefited last week? The euro. They raised rates over at the ECB, and the FXC was rewarded, moving up higher. This has got legs. This can move up higher, whereas the yen, it's probably going lower, a lot lower, relative to the dollar and the Dixie basket. The Dow Transports attempted a breakout last week, but they were rejected. And the Dow Transports, they're our canary in the coal mine for the equity market. And I've been warning across the board, this is an overbought market, very, very extended. May not be a crash, but we're going to correct here. And I'm standing by that. And on Thursday, they closed the chart up for the second consecutive day above the 2 standard deviation Bollinger Band. I bet you we kissed the 3 standard deviation Bollinger Band. Came very, very close. And we were down on volume on Friday. This was institutional distribution. Let's see if there's any change in S&P futures. The machines are still 100% long, no selling yet. S&P's, NASDAQ 100 futures, Russell's futures, they're still 100% long, no selling yet. Moving on, Dow Jones Industrial Average up 1.25% on volume. But how did they close out the day on Friday? Bearish key reversal bar. Folks, if you're not familiar with these terms I'm using, 5-part video tutorial, my top 5 favorite candlestick patterns below. It's free. Look at the volume on Friday. Massive, massive volume on Friday. This is not mom and pop selling 100 shares. This is institutional selling. S&P 500 on the week, strong price action, up over 2.5%. Stokes, very extended. Big volume to the upside, net. But again, we got to take a look at how we closed out the week. I got to clean these charts up. And on the day, bearish key reversal bar, down on volume, Stokes rolling over. Qs, weekly view. Remember, we spoke about that 370 mark on the Qs. That's the line in the sand. There's a lot of sellers up there. This is where ultimately the markets broke. Remember, we spent several weeks flirting with an attempted breakout on the Qs back in 2021. They did try to break them out. They were rejected. And we broke down the week of the 10th, continuation move lower. The 18th, the week of the 18th of January, we are back up there again. Very, very extended on stochastics. And when you take a look at a daily view of the Qs, I mean, my God, this is nuts. This is nuts. And remember how expensive these names are. On a forward-looking basis, they got a PE of 30 with no guidance higher on their EPS growth. We went over that earlier. Stochastics, so extended. And this is one of the primary reasons why I added to shorts on Thursday was that we were so extended on Stokes and they were blowing this up and into the rising upper band of resistance. The risk reward, it made sense. And the fact that the machines are 100% long and no longer buying, and I know it's the average consumer out there, the average investor that's leading the market up higher, it's a no-brainer. Look at the volume on Friday. MACD histogram, losing strength. The banks we already went over. We'll skip that. We'll skip technology. The trades with the Qs. Semis still strong, but remember, names like Nvidia got rocked on Friday afternoon. And on the day, SMH, this is a pretty bearish setup here. This is an outside reversal bar. Another one of my top 5 favorite candlestick patterns. Link below, 5-part video tutorial free. Volume was not that bad on Friday. Biotechs, I'm not happy with the way LABU closed on the week, so I would not be a buyer here. Let's go to the daily chart for members. We have a position here. Yeah, you got to avoid this. This is another outside reversal bar on LABU. So the path of least resistance at current appears to be to the downside. When is that wrong? If we gap up and into Friday's candlestick and we close there, we get an inside bar, perhaps we consolidate, then we move up higher. Right now, I would avoid. Consumer staples, very strong week. I mentioned a couple of weeks ago, the machines were buying and they were up over 2%. So the machines went from net short to net long, and it's reflected in the share price. But I think that they're beginning to peter out here on staples, a little bit of a fade. They'll go down with the market. Consumer discretionary stocks. These are meant to be short right now. I'd like to see a spike up to 170. Then I think I'd like to short them. They're trading up and into the 3rd standard deviation Bollinger Band. Up on good volume last week. Daily view. Not an outside reversal bar. Bearish reversal bar. very extended on stochastics. I think we correct here, down on big volume. Emerging markets, weekly chart looking good. Dollar down, emerging markets up. Makes total sense. This is ex-China. I would not go buying funds, including China. The however is that this is going to go down with regular equities. So if the markets pull back, so will emerging markets. So they were down on Friday with the S&P 500 and the Qs. Energy, they may catch a bid. Why? Oil caught a bid. So energy stocks held support last week, whereas oil flashed a bullish key reversal bar. Why would oil flash a bullish key reversal bar? Dollar dropped. What's oil priced in? US dollars. So could this have legs? Maybe, because of the weakening US dollar, not because of a demand for oil. So you have to hope that the demand for oil outweighs the strength of the US dollar. Or I should say the abundance of oil outweighs the strength or the weakness of the US dollar. So if there's demand here, oil is going to move up higher because the dollar is weak as well. Let's go to a daily chart. I want to check out a closer look. Good rally here. What are the machines doing? Oil and gas, 55% long. I'm not seeing any buying here. It looks like they're pretty neutral. I'm not seeing any selling, nor am I seeing any accumulation. So it looks as though they're on the sidelines right now, but net, they're long of energy. Oil and gas, I should say. Natural gas. I spoke about this one. The machines were buying. This is Boyle. It broke out last week. We may put on a long trade here. I may just paper trade this one just to back test the accuracy of this report I'm getting. Gasoline. Bullish reversal bar. Why are we seeing inflationary pressures? Because the Federal Reserve is going to backstop the federal government. They paused on rates. The federal government keeps blaming the citizen for demand for buying goods when in reality, it's them that cause inflation, not us. They're going to spend their way to oblivion because there's nobody stopping them. There's the uniparty in control. Bullish reversal bar. Gasoline prices are going up higher because we have a government that's out of control. Gold broke out last week. It's hard to see here. Net, we closed down, but we saw a breakout in time. Watch for a retest of support this coming week, and then we could possibly get a continuation move up higher. Take note of the higher lows on gold. Daily view. Higher lows, stochastics daily chart. Watch 1980 is the price in the sand. If we close above 1980, in all probability, we're going up higher. Mining stocks. I can get excited about gold. I can't get all that excited about the mining stocks just yet, so I'm neutral on them. I don't like the fact that stochastics is still down below 50 on a weekly time frame. I've been here before, and I don't like being there. I want to see these stokes back above 50. Silver, we went over already on an intra-period time frame, down at current, but on a weekly time frame, they held support. Silver is under accumulation. Let's go to the daily chart here. Daily chart, bullish reversal bar on Friday, looking good. Volume light. So I'm looking at them with a little bit of skepticism. Even gold. Silver miners closed weak on the week. No great shock. Gold money, of which we're long. This is our little penny stock play we've had for a long time now. And not doing much here, not much to talk about. Chipotle Mexican Grill. We are short of. It broke support 2 weeks ago here. And I mentioned last week, expect a rally in CMG in an effort to try to recapture this support level, this prior lower band of support in blue. It's exactly what it did. And then it rolled over and had a horrible day on Friday. Bad for longs, good for us because we're short. Netflix, we don't have a position in. This should be Nvidia. Nvidia, extremely extended on RSI. RSI weekly time frame, 87. Stochastics, extremely overbought. Price action, very, very good price action. Very, very good price action. Volume, very good. My issue with the chart of Nvidia is short-term in nature. Let's go to a daily chart. We saw a blow-off top high here on May the 31st with RSI at 85.47. We pulled back. What did we do? We put in a higher high. What's RSI doing? Putting in lower highs. That's not the trend you want to see. Stochastics, pretty overbought, now rolling over. These daily stochastics have not been down at the 20 mark since back here in December of 2022. You saw a reversal on the day on Friday. They did eke out a gain of 39 cents. Volume was good. Let's take a look at a 30-minute view, how we closed out the day. And you could see there was all sorts of selling in the afternoon on Nvidia. There's more lower lows to be had here. And if you take a look at a 4-hour chart of Nvidia, we are at support. They closed it right at support on Friday. So do they rally it? Do they fade it? We don't know. But it looks as though on that 30-minute chart, we could see lower lows on Nvidia. These are all wrong. This should be Tesla. I'm going to fire my producer. Tesla. Now, Tesla, we are short of. We are short using a debit spread. We are short using a debit spread and a strangle, a cash flow strategy. So that cash flow strategy helps finance the debit spread, the time decay. So daily chart, we had a breakout last week. Does that give me the warm and fuzzies about being short? Absolutely not. What gives me the warm and fuzzies about being short of Tesla, daily chart. RSI 85.94. And despite the fact that we put it in a new intra-period high on Friday, RSI is now beginning to drift lower. Momentum is beginning to wane. Stochastics have flatlined, very extended, and due for a pretty ruthless pullback here. Is this the high of this year? Don't know. The markets will tell us. So we'll be looking to book profits on any pullback to the 20 period, or if God gives us enough luck, to the 50 period moving average. But I'm going to be eyeballing the 20 period moving average at a point where we're going to leg out of that short position, step to the sidelines, see whether or not we get a rally back, which we're going to. Do we take out prior highs? And if we fail to take out prior highs and we break to new lower lows, we're going to re-enter short on several of these names. Let's do some chart requests. Eric, Bob's content is always top. Thank you, sir. Appreciate that. He keeps it real, no BS. I try to. Gets me in trouble sometimes, but I try to. Thank you. Danny, thank you, sir. Please smash the like button, please. Subscribe to the channel, leave a comment. And let's do some chart requests. We'll wrap it up. I'm planning my trip back to Italy already. Here's the place I stayed. I'll show you my room here. This is the triple room. This is mine. This is our apartment. It was really great. Can't wait to go back. Anyway, do we have requests? I didn't see any requests. Let me go to the members area. What just happened? Italy is better than Long Island. It's different. It's different. I think Tuscany, Long Island has some very, very beautiful areas, especially out east. Um, but Tuscany is just mind-blowingly beautiful. It's just mind-blowingly beautiful. And just the attitude, they just relax over there. Like here, everybody's rush, 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 rush. And I'm one of them. I rush, rush, rush all the time. So it's just healthy to be around uh, certain Europeans. Yeah, no Jody today. Jody, we miss you. Sean, you're right. You're right. If you go out to the North Fork of Long Island, certain parts of the South Fork, I mean, it's really beautiful out there. Okay, let's do CrowdStrike, CRWD. That 156 mark is critical support for CrowdStrike. It's holding the breakout point here. The trend is clear and defined. It is to the upside. As you can see here. So right now, it's still looking okay. It's got to hold 155 per, 155 per share. Was that 155? 150 per share. My apologies, 150 per share. Daily view. Friday was a very, very rough day for it and the market. So you have to make the assumption that CrowdStrike, if we do get the pullback in the equity markets, let's check back in what we're doing here. NASDAQ's made a little bit of a comeback. Not much has changed here. Let's see what Vol is doing. Vol is still okay, still strong. So you have to assume that CrowdStrike, if the market pulls back, is going to pull back with the market. Nothing bad about the stock, but I suspect that we're going to do a little bit more of a pullback here on CrowdStrike. I'd be eyeballing 155 to then 153 as support levels, then 150. 150 is a line in the sand. And if that breaks, then you're really going to want to avoid it. That's your stop loss point. And I guess that's it for tonight, folks. I don't have much to go over here. It was a quiet weekend. Did anybody add anything to the watch list? Franklin did. Franklin, Tesla. Sean, CHK. That's from the 16th. Wow, I'm late. Sean, I'll go over CHK for you. I missed it. You're welcome, Franklin. Have a great evening. I'll talk to you tomorrow. Chesapeake Energy, looking good here. Looking really, really good. Now, keep in mind, I mentioned earlier that the machines are pretty neutral, so there's no real algorithm behind this buying it up yet. That could change, but we had a nice breakout. It looks as though we have a higher low and that the sell-off may be over. I would use a stop loss on this one. You know, if it closes down below $80 per share, then that would be a problem for Chesapeake. I would avoid it. But right now, I think this could be bought. RSI is going in the right direction, putting in higher lows. Daily view. Resistance immediately above at 82.65. So just beware. We have a little bit of resistance above. Otherwise, the longer-term chart is looking pretty good. So Chesapeake worthy of a nibble here. And as you begin to break out above resistance levels, then you want to begin to add more aggressively. Folks, thanks for being here. Sean, you're very welcome. TZ Burton, you're very welcome. Everybody have an awesome remainder of your long weekend and a profitable trading week.